Brazil is the biggest economy in Latin America, the seventh largest in the world, and Brazil is on pace to become the fourth largest economy within a decade. Brazil has always struggled with poverty, but in just a short time, tens of millions of people have moved into the middle class. The country's growth has ignited a taste for the good life, creating a consumer market it didn't have just a few years ago. Many Brazilians can now purchase electronics, vehicles, appliances, and homes, and they've moved to the cities to find work, according to James Roberts with the Heritage Foundation.
I think it's moving as fast as it can, and I think that's a good thing. There's still too many people in the major cities of Rio and Sao Paulo who migrated from the poor outskirts of the country. This is a huge country that's larger than the lower 48 of the United States. But there has been development in areas like the northeast of Brazil where there will be jobs, so people will not have to go and live in the shanty towns around Sao Paulo.
And thanks to a decade of economic reforms led by former President Luiz Inácio Lula da Silva, Brazil has been able to insulate itself somewhat from the world's financial crisis while getting help from foreign investment.
Because they resisted inflating the economy and because they followed these prudent fiscal and monetary policies, they built up a considerable amount of reserves of hard currency. That has allowed them to be buffeted from the shocks of the debt crisis. They've had 6% growth in gross domestic product.
At the Atlas Economic Research Foundation, Alex Chaffwin says Brazil has been slowly adopting socio-economic policies, such as food assistance to the poor and low-interest loans for home buyers and businesses. He says Brazil has been helped economically by China's demand for goods and commodities such as iron ore, soybean, and oil.
Without question, it has also profited from the big growth of China and the demand for some of the Brazilian raw materials and other products that Brazil has been selling.
In 2009, 28 countries invested more in Brazil than China. Just 1 year later, China became Brazil's #1 investor. It is also Brazil's #1 trading partner today.
Trade between China and Brazil has been increased like 10 times in a decade, 10 times.
What they've been concerned about is the composition of their exports to China and being too commodity heavy. They would like to see more value added in Brazil exports. So that's been a bone of contention between China and Brazil.
Brazil is part of the group of rapidly emerging economies of Russia, India, and China, the so-called BRIC nations. Despite its history of economic problems and income inequality, Brazil's economy is bigger than that of India and Russia. But the size and growth of China's manufacturing sector still stands as a source of envy for some Brazilians.
They want to be exporting iPods, but that hasn't happened. And in fact, it's ironic, but many of the costumes in the famous Rio parades at Carnival every year are now made in China, much to the distress of many Brazilians. And a lot of processed steel, too, which is another area they'd hope to advance in.
But China's influence in Brazil, however defined today, is not something that concerns Latin America analyst Alex Chaffwin.
Brazilians, I think they feel that the Chinese will never to do anything. They know the Latin American territory better than the Chinese, and that they will play the game to their advantage.
Like the nation itself, Brazil's advantages are big. That includes its vast amount of land for agriculture that China is buying up on the order of hundreds of thousands of hectares. Also, its recently discovered reserves of oil off the southeast coast, estimated in the billions of barrels, makes Brazil one of the most promising countries in the world for oil exploration. But James Roberts says getting to that oil, some 11 kilometers down, will not be easy.
Well, unfortunately, it is located below about 7 miles of ocean and 2 miles of Earth's crust called pre-salt. It's going to take billions of dollars of investment in high technology that they don't have. And the companies that are going to go in there and take those risks are probably going to want equity participation. Right now, the Petrobras is a mostly state-owned entity.
China has already committed $10 billion to Brazil's state-owned oil company Petrobras to help finance the exploration of this oil, and in exchange, China will get a long-term supply of it. Can the countries of the BRIC bloc lead the global economy back to health? the World Bank and the International Monetary Fund say risks to the global economy are intensifying, that Brazil's growth could slow to just over 4% this year and to 3.6% in 2012. And things could get worse if China's economy begins to slow down, and there are signs that it's doing just that. Brazil will host the World Cup in 2014 and the Olympics in 2016. For these big events, analysts say Brazil will need to make big improvements to its infrastructure, to its airports, its shipping facilities and railways, more of the very things China has learned to do very well. I'm Philip Alexio, VOA News.